Pepsi stock is down to 5-year lows, dividend yield is up to all-time highs, and Wall Street doesn't want you to pay attention to this, but I'm adding it to my long-term portfolio. What is up? What is up? Rob here. So this video, we're going to be going over the new long-term portfolio edition using the monthly deposit of May. And we actually used that deposit to buy Pepsi stock. So let's go. Now, we actually waited 2 weeks for this deposit to come in. This trade actually took place on May 14th. And we ended up getting a price here, which I'll show you here. All right. If you look down at the bottom here on the screen, we picked up 4 shares at a price of $128.86, which was a great price. We've been watching Pepsi for a minute here, and it was above $130, and I had a feeling that it was going to crack 130, and I said, when that happened, it was time to go in the market and scoop up these shares. We're not going to be greedy out here and wait for it to go any lower. So we picked up shares at 128 for the long-term portfolio. Now remember, the strategy for the long-term portfolio is to buy names at lows, not the highs. We're not chasing hype out here. And we actually have to believe that the company will be here in 10 years. And, ideally, we use the company's products or service and we can understand the business at a deeper level. So, for example, Pepsi here. This chart here, what you're looking at, is a time frame for 5 years on a weekly period. So each of these candlesticks are for that week, going back 5 years. So you can see now where Pepsi's trading. All right, it closed today on the market at $131.50. Right, you could go back 5 years, and you're getting these prices. So we're buying Pepsi at a 5-year low. Now, let me pull this chart out for you just so you can kind of see a little bit further here. Here's 20 years. So, if you kind of want to look back on a relevant timeline, the high was up here at 197, and then if you look back to the COVID crash, the stock went all the way down to, looks like $101. So, where it's at right now, at $128, I think that's a great price to get in, right, for the long term. If the stock goes down from here, all right, that's great. We can buy more maybe with a monthly deposit if, other opportunities don't present themselves. But, I felt as though, 128, great price to get in, and then we'll go from here. So just remember that, the strategy. We're buying stocks at lows, we're holding them for 10 years, we're going to believe they're here, and we use the product. So, I wanted to go over a little bit. All right, well, it does meet that criteria. We're buying at lows. It's a company you all know, Pepsi. But let's talk a little bit about it. So, right now, Pepsi is going to give you a dividend yield of 4.33%. So we're getting paid, a little over 4% a year just to hold the stock. And when the stock goes up in value, we'll make money. So we're going to get that 4% and the appreciation when the stock goes up. Now, on the long-term portfolio, we have a feature enabled called drip. Now, I'm not talking, we got that drip from that jewelry, but come on, man, we got that long-term drip. Now, you're probably wondering, well, what's your drip? Well, what it is, it's the dividend reinvestment plan. So, every time Pepsi pays that quarterly dividend, right, rather than it hitting our account as cash, it's actually going to automatically reinvest the dividend into buying more shares. So, of course, it's not going to buy us full shares. One day it will be, because we're going to compound these dividends and the long-term portfolio is going to get crazy. But for right now, it's going to buy us fractional shares. So they won't be whole, but, every dividend, we're going to be constantly accumulating Pepsi stock with that dividend. And then the dividend's going to pay us more each time because we own more. So it's great. We're getting Pepsi at a 4.33% dividend. Come on, that's great. We got drip. I just wanted to let you guys know that Pepsi has 52 years of consecutive dividend increases. So they haven't, cut their dividend or haven't, stopped increasing their dividend, in 52 years. So, as you can see here, the trade took place on May 14th, 10:26 a.m. at a price of $128.86. We're currently trading around $131.50. So yeah, it's a great buy. Revenue for Pepsi in 2024 was $92 billion. And Pepsi operates in over 200 countries. And the thing about Pepsi is, a lot of people think it's just like a drink company. I mean, Pepsi, when you hear Pepsi, you think of the cola, the drink. But, they're actually a huge, huge company that also, their business model dives into the realm of snacks. So 55% of Pepsi's revenue actually comes from their food and snacks category of their business, and only 45% of the revenue comes from the beverages. Just some fun facts here also, just that, Pepsi was, when they first started out, it was originally called Brad's Drink. And then over time, they actually came about, to now where, we call it Pepsi. And Pepsi actually used to own KFC and Taco Bell and Pizza Hut. But they ended up, selling the brands. They bought those companies back in the day because they thought, well, I mean, when people are eating fried chicken and tacos and pizza, what are they drinking? They're drinking soda. So they thought it would be, a synergy business. But, it turned out that, it wasn't actually working out because it was, it was cutting away from their core business of, beverages and snacks. So, they dived into a realm where, they weren't really masters of, and they eventually said, all right, let's just sell this off and, let's focus on our core business. PepsiCo also has 23 brands that make over $1 billion a year. $23 billion brands. That's crazy. So, what I want to show everybody here is PepsiCo's website and all of the brands that they own. So, just from this site, you can kind of, see some right here. Lay's, Mountain Dew, Quaker Oats, Gatorade, SodaStream, the list goes on, but we can actually hop in here and look at it on a greater detail. So you'll see they have Aquafina, Bubbly, the sparkling water, Brisk, Captain Crunch cereal, Doritos, Cheetos, Gatorade, Jack Links, and they own Frito-Lays and Lipton. All these brands. We're talking Mountain Dew. I pretty much use all of these brands on a daily basis. Pastaroni. Pure Leaf iced tea, Quaker oatmeal. I got that right now. The Sabra hummus. Tostitos. Sun Chips. They got it all. So, all these brands are just household names that, we use. And, this company's going to be here in 10 years, and it's trading at 5-year lows, paying a 4.33% dividend. And you're going to be able to get brands like Mountain Dew and all this great stuff. But you got to be probably asking, you're like, Rob, well, what's going on? What caused the stock to go from 196, all the way down to our purchase price, 128? So, what's been going on? What's been causing the sell-off? So, Pepsi has had to raise their prices to offset increases in the cost of their products. So that actually started to cause people to buy less. But, over time, as Pepsi gets more control over their supply chain and cost, their profit will regain. Also, health trends have been impacting Pepsi here. A lot of people have been starting to use Ozempic and Wegovy, really starting to focus on their health, use diet apps. So, there's a thesis that, fewer people are buying sugary drinks and processed snacks. But, shout out, the last long-term deposit. That's also why we picked up NVO, Novo Nordisk, because in the last long-term deposit, we pick them up, and they're actually the ones that make Ozempic and Wegovy. So we're making money both ways, baby. When people are, eating the snacks, drinking the Mountain Dew, we're making money. And when they're taking the fat shots and inject themselves, we're making money there. So we're making money on the up and the down. All right? So, I mean, that health trend might be a concern, but they own more than just junk food. I mean, if we go back here to the brand list of what, Pepsi owns, I mean, you can see here that, they're starting to diversify their portfolio of brands and to, not just, unhealthy snacks and drinks that people want to call it. I mean, you're starting to see here, if we scroll, where was it? Down here, you're starting to see they invested in Sabra hummus. Chickpeas are healthy for you. They also invested in a company, Naked Juice, if I could find that on here, which is, a fruit juice company that's really healthy for you. I'm trying to find it. Where is it? Maybe I'm missing it here. There's so many brands. But they do own that company, Naked. And then Quaker Oats. I know that was on here. I saw it. Boom. Right here. Quaker Oats, healthy. And then they also have Life Water. Right here. So they are starting to, diversify into these healthier brands. So that's not a concern at all. Another reason why, the stock's been selling off is because RFK was, put into President Trump's cabinet. And, he started talking a lot and putting out headlines about, cut in processed foods and sugary drinks from federal programs like food stamps, which, could theoretically lower Pepsi's revenue. But, I mean, I just don't think that's going to happen. I mean, to actually execute that, I mean, they're going to have to somehow deviate what is considered healthy and unhealthy food, I mean, on a legal basis, and then restrict consumers from buying those products. I mean, I just don't think that's actually gonna happen. And even if it does, I mean, it's not gonna affect, all of Pepsi's revenue. I mean, they operate in over 200 countries, and I mean, that headline is is causing this negative sentiment and causing the stock price to come down. But as a long-term investor, these are just the things that give us a window to build a position in a great company while everyone else is panicking. I mean, people panicking about the increased in their costs and them having increased prices and people starting to buy a little less, and oh my god, the health trends, like Ozempic came out and everyone's gonna stop eating Doritos and Mountain Dew. Like, come on. We really think that's gonna happen? No. And even if it did impact it a little bit, that's why we picked up NVO on the last long-term deposit. So we're making money both ways. Come on, baby. Making money both ways. All right? So this month of May, we use PepsiCo for the long-term deposit, and we're going to hold it, and we're going to ride it out, baby. Let's go.